Good morning. Welcome back to Professional Insights brought to you by the National Referral Network. And I know this morning's topic is not what we sit around networking events and family events talking about. However, when it comes to securing your health and financial well-being, there are a few things that are as important and confusing as choosing the right health insurance for you and your family. And this morning, we've got an individual that's been in the industry for a very, very long time, Kimball Redd. We're going to bring him in. We're going to start talking about some of these nuances. So if you are looking for health insurance right now, individual, you don't know where to go, this is the place you need to be. But before we get started, please hit that like and subscribe button. Let us know what your thoughts are. We drive these conversations based off of your comments. So without any further ado, let's get going. Good morning, Kimball. How are you?
Hey, great. Thank you, Mike. Thank you for having me on.
Absolutely. I know this is, like I said in the introduction, this isn't something people sit around
Right.
their Thanksgiving table, or especially as we go into the holiday season. We don't sit around and talk about these things, but it's one of those things, Kimball, that we need to know about. I mean, there's been a lot of changes over the last 12 years, a lot of different directions that health insurance can go. There's companies that are leaving states. There's all kinds of things going into that. We're not going to get into all of it, but to kind of start this out, Kimball, what are some of the main differences between, say, an individual plan and an employer-sponsored plan?
So, if your company is over 50 full-time employees, you have to have a group plan by law. It's mandated. And with that, you're kind of handcuffed on what you can do. Primarily, who I help are businesses under 50 and individuals.
Okay.
And on the individual side, there's a couple main options for health insurance. There's a marketplace and there's private. There's also something called a health share. Now, I'll give you kind of little 30-second history of the marketplace, if you don't mind.
Okay, because you threw the marketplace in there, and I know a lot of people need to know that. So yeah, that'd be great.
So when Obamacare or the Affordable Care Act or the marketplace rolled out in 2014, they were trying to fix some problems. They plugged some holes, but there's some fallout effect. But essentially, they wanted to get rid of a few issues that were plaguing the industry. So the first one was pre-existing conditions.
Mm-hmm.
So prior to that, if you had cancer and lost your job, you're kind of stuck. No one would take you on, and you're in a really bad spot. So the marketplace fixed that. Nobody can be denied for pre-existing conditions. You just have to sign up during open enrollment or qualified life event. Nobody can deny coverage. The second thing that happened, essentially behind closed doors in Washington, committees got together and decided they wanted to standardize the industry, and there's certain things they wanted to have covered. So they put a mandate out that all insurances that are ACA compliant have to cover a big long list of things. They have to cover mental health, they have to cover maternity, they have to cover pre-existing conditions, they have to cover some things that some people might object to and some things that are good, but there's a big list of things that they have to cover.
Okay.
And the net economic impact of that, you have to cover more stuff, and you can't say no to anybody. The cost went up. And then the third major rule change, which kind of revolutionized the whole industry, if you will, marketplace plans are priced entirely off of your income. Nothing else matters. So if you fall below a certain income level, you can get a subsidy. Your plan can be really cheap or even free. If you're above that line, they get really expensive. You're essentially helping to pay for all the free people. So the marketplace can be really, really good and really affordable for certain individuals. It can be really bad, high deductibles, and really expensive for other individuals. So it just kind of depends on where you fall. It's income divided by number of people in the house. So if you've got a lot of kids, you can make a decent amount of money and still get a free plan. If you're single, it's a lot more strict on where the income line is. And then it ratchets up with age. So the older you are, the bigger the subsidy you get. And then just to kind of mix things up a little bit more, President Biden, during the American Rescue COVID money, increased the subsidy pretty substantially. So right now the subsidies are higher than they've been. They'll be there probably at least until the end of 2025, regardless of what president. They may go back to pre-COVID levels. They may not. We don't know at this point. But politics do play into that figure a little bit. So,
which is interesting, Kimball, because I mean, I was just going to ask what are some of the bigger concerns people have with cost. But I think it's interesting. I didn't know a lot of that, right? I mean, one of those things that, I mean, I understood the pre-existing conditions and the open enrollment. But one of the things that you mentioned in there that I wasn't aware of is that the cost of it all is that, so on a percentage of the country, how many people do you think fall under that category to go with the marketplace?
much, much higher than you would ever suspect, actually.
Okay.
I think there's probably at least 50% of the population, probably a lot higher, that should be on the marketplace because it's going to be more affordable than any other option. So the subsidy is pretty generous, and there's a lot of people that can get a really good plan for really cheap on the marketplace. The other thing that I didn't mention that I should have, one of the interesting things about the marketplace is that a lot of people don't realize is the more you make, the less you get, essentially. So as your premium goes up, so does your deductible, and so does your out-of-pocket. So the more you make, the more you pay, the higher the deductible, and the higher the out-of-pocket. So on the top end, you're paying a lot and not getting very much for it. On the bottom end, you don't pay anything for your insurance, and actually the insurance is really, really good. You can get a zero deductible plan, you can get low out-of-pocket, you can get plans that cover just about anything with a zero copay or really cheap copay for doctor visits. So on the bottom end, you can get insurance that's fantastic. On the top end, there's really no way to get really good insurance. The deductibles and the copays go up. You can bump your plan up from bronze to silver or gold or even to platinum. You're paying a fortune to get mediocre benefits on that.
So at what point in time do you go from, so if we're on a kind of a scale, at what point in time do you go like income, you get off of the marketplace and you go into the kind of a private insurance?
Yep. Now the private plans that I kind of specialize in, they're not ACA compliant by choice, meaning we can manage our cost by managing our risk pool. So they're health underwritten. You have to be fairly healthy to qualify.
Okay.
As long as you can qualify, you're going to get much, much better benefits for a lower cost. So if you're higher income and fairly healthy enough to qualify, the private's going to look much, much better.
Now, would that be the same for somebody that their income is a little bit less? Like, what do you consider higher income, I guess, is my question.
So that's a very, very gray area. It's a moving target. It depends on your age. It depends on number of people, number of dependents in your house. Like I said, if you've got a lot of kids, you can make a lot of money and still get a really cheap subsidized plan potentially.
Yep.
Or if you're 30 years old, the income is much, much different than if you're 60 years old as far as that scale. So it's almost hard to put a number on it. We usually just plug in what's your income, how many dependents you have, how old's your wife or your husband, and this is a subsidy you qualify for. Now we'll take that subsidy and look at plans and compare it to what a private plan would be. And it's usually going to be pretty obvious for a lot of people. The private's going to look much, much better. The marketplace is going to look much, much better. Occasionally we get into that 50-50 where it's like, well, one might be a little bit more than the other, but let's compare benefits. And this is really a coin toss. You choose, what's important to you. With the private plan, I can get a nationwide PPO. You usually can't get that on a marketplace. So if someone travels, the private might look better, depending on pre-existing conditions or needs. There's some different health considerations to take into account too.
Now, Kimball, there's two reasons why I asked that question. The one, I think it's very important for viewers to understand that they have to do their due diligence and see what's best. To go to the marketplace because there's subsidies on there and you think you're going to save money doesn't mean it's the best option for them.
True.
But more importantly, there's a misconception that for some reason, and we get this as financial advisors, that it's going to cost them more to work with someone like you than it is to go in the marketplace. So I want to be very clear. Kimball,
yes.
Does it cost more to work with you than it is for me to go to the marketplace and do this on my own?
$0 out of your pocket.
Thank you.
So I get paid a commission from the insurance company. My expertise is most markets. We're in we both live in Draper. There's about 80 marketplace plans available. There's some that are better for certain conditions, some that are better for maybe maternity, some that are better for diabetics, and I know that, and most people probably don't. So it can be pretty overwhelming. Here's 80 plans. What do I choose?
Right.
There's different networks. So it doesn't cost anything to use me. And we're going to get a better optimal result typically if I can leverage some of my experience.
Yeah, and I think that's very important because we talk to a lot of different professionals. It's not just health professionals, health insurance, it's life insurance and property and casualty for business.
Mhm.
People think that, oh, if I do it on my own, I'm going to save money. And really all you're doing is not getting the plan that's optimized for you, your family, and your situation.
Yeah. Yeah.
Okay. So now that I should have said that, asked that at the beginning,
No,
right?
that's a great question.
Because it's very, very important for people to understand it doesn't cost extra. It doesn't increase your rates. It just gives you the ability to get educated on what you need to best for your family. So now that we got that out of the way,
Yeah.
you mentioned some of these different plans. I had no idea that there were 80 different options. What are some of the key differences between these HMOs, PPOs, high deductible? Because there's a lot of talk within different communities online about high deductible plans and maxing out your HSA accounts and all of these strategies. Talk to us a little bit about HMOs, PPOs, high deductible plans, etc.
I'll do that. Can I jump back one little
Sure.
second? So
Yeah,
the marketplace, it's based on zip code.
Okay.
And there could be 60 plans, there could be 120 plans in some zip codes, probably about 82, I think, in Draper. What I am looking at is the same thing you'd look at if you went to healthcare.gov. So yeah, it's just expertise there. However, the private plans that I offer, you can't find online.
Okay.
These are health underwritten plans, and they're not accessible without going through an agent like me. So I do bring more choices than what you can get on your own, as well as some expertise. And then for some people, there's a health share might be a fantastic solution. I won't go into that a whole lot, but a health share is basically a kind of a co-op. You pay a certain amount of money every month. You're 100% responsible for all your medical bills. You request a reimbursement. There's some downsides. It could take a while to get your money. There's no guarantee, but for certain situations, they are a really, really good option. Maternity, they actually are fantastic for. And a lot of times I'll use a health share as a supplement to your regular insurance.
Mhm.
The health share will be actually a lower out of pocket than your high deductible marketplace. And sometimes it's good to put both of those in place for a time. You can use it as a standalone too, but there are some risks to that. Anyway, so that the marketplace, every broker, every agent, every individual has access to the same, but the private plans, individuals don't have access to.
Gotcha.
And then to your question, difference between HMOs, PPOs, all of that, there's essentially four main options for network type. And sometimes network type is one of your most important decisions. You've got something called a EPO, Exclusive Provider Organization. It sounds really impressive.
It's like Kaiser or
Yeah.
Intermountain Healthcare.
Yeah,
Okay.
Intermountain Healthcare is actually an HMO, not an EPO.
Okay, perfect. So would Kaiser be an EPO?
Yes, I believe
Okay.
they would. They might be. They're more in California, and I'm licensed in 30
Correct.
states, not California. So
Okay.
I'm not as familiar with Kaiser, so I won't pretend to label them one or the other.
Okay.
But typically an EPO would be like a university hospital network.
Gotcha.
They
Okay.
might be really, really good, and there might be a reason based on health needs or needed to see a specialist that would be the one you want to go to. However, typically you have your fewest choices as far as facilities and in doctors. So in the case of a university hospital network, typically there might be a couple hospitals and a few clinics, and it's a lot smaller network, geographically, usually within a couple hours. HMOs are the next best on that scale, and HMOs often cover state boundaries fairly well. They're a lot bigger, and you mentioned Select Health or IHE. Select Health is an HMO.
Okay.
Select Health is fantastic, literally one of the best in the country. People study them, people try and emulate them, but there's a couple downsides to an HMO. Geographically, if you go out of network, you'll have typically a separate deductible and a separate copay. So in the case of Select Health, they cover, you draw a big circle around Utah. They go into Idaho, Nevada, Wyoming a little bit, but you're not covered at any beach anywhere in the country. You're not covered at California, you're not covered in Florida, anywhere else. There is no Select Health or IHC facilities outside of that network. And then with an HMO, you have to get a doctor's referral to see a specialist.
Okay.
So they have gatekeepers and they kind of control who you get to go to, which isn't such a bad thing, but to some people it is. And then the highest level, which usually costs more, is what's called a PPO, Preferred Provider Organization. And that gives you access to a lot more doctors, gives you nationwide coverage. You don't need a referral to see a specialist, so you can kind of choose the doctors you want to go to. Unfortunately, in most states, PPOs are not an option on the marketplace.
Okay.
So the highest level, the one that you want, you usually can't get. Often
So you'd have to go through someone like you.
A private plan or a group plan through work. Most of the time, larger companies are going to have a PPO option.
Okay.
But yeah, they're a little more restrictive and they're not accessible to everybody.
Okay.
So
and then kind of taking that a little bit step farther, and you mentioned this at the beginning, pre-existing conditions. What should people be aware of when choosing their plan? And now, granted, there is not a very long list, but there is a list of what would be considered a pre-existing condition, not necessarily wanting to go through every one of these pre-existing conditions, but in general, what should people be aware of in choosing a plan if they have one of these pre-existing conditions?
So pre-existing conditions are irrelevant. They don't matter to any marketplace plan, for any group plan. So if you've got some health conditions, if you're in the middle of cancer treatment, they can't deny you. Those plans are available. The only time that comes into play at this point is for private plans. And it's part of the business model. The reason that a private plan can offer lower deductibles and better premiums is because they're managing their risk pool. So if you've got a chronic condition, if you've got pending treatment, surgeries, you wouldn't qualify for a private plan at that point, or at least not till you're fully recovered or treatment's subsided and you're healed, cured, whatever the case may be. So a private plan is not an option for everybody, but for those who qualify, it can be really, really good. The private plans that I do, you have to qualify at the time of the application. You never have to re-qualify. You never have to sign up again. You can keep it for the rest of your life if you want. You just can't get on it if you've got those current conditions. In an example, pregnancy is a declinable, you don't qualify for my private plans if you're currently pregnant. You're considered high risk from an insurance perspective all the way up until the baby's born and home from the hospital. So if you're currently pregnant, you can't qualify. After the baby's born, you can get on it. Before the baby's born, before you're pregnant, you can get on it. But that would be something that the insurance would look like, is we know they're going to the hospital. We know there's going to be expenses. We're not going to take on an existing liability knowing that we're going to insure this person and they're going to go to the hospital. So
there are some plans, Kimball, and correct me if I'm wrong here, there are some plans that even if you're planning on being pregnant within a certain time frame, they would not necessarily, not saying they're going to get declined, but they may if they're planning on getting pregnant. Is that correct?
Yeah, well, with the private plans I do, if you're currently doing infertility treatment, anything like that, that would also kind of be a decline leading up to that. Health shares, most of them have some you just have to be on it before you're pregnant. Some have to be on it 30 days before you're pregnant. There's a couple that say 300. You have to be on it 300 days before the baby's born. So there's some different rules, but they're all kind of the same concept. You have to sign up for health share before you're currently pregnant, with some minor tweaks on that.
Okay. Now, we've talked a lot about different aspects of health insurance, and we talk to clients all the time, is that every plan, term life insurance, whole, IUL, different investment strategies, they're all tools, right? And it depends on what you're wanting to accomplish as to the tool that you utilize. And so, Kimball, how can individuals maximize their benefits, especially when it comes to things like this, if they don't know where to turn, right? If they just pick a single plan, are they stuck with that plan, or can
No.
they go from an HMO to, as an example, an
Yes.
HMO to a PPO to a shared? I mean, can they, as life changes, can they move to different plans?
People should actually review their health insurance annually with an
Perfect.
advisor. In fact, this plan that we put in place last year, is this still the right plan for our coming needs next year? Health changes, income changes, job status changes, lots of different things change. Family dependents change. You're getting more kids, or you're losing kids as they start filing taxes on their own, wherever you fall on that scale. So that should definitely be reviewed annually. Um, in a lot of people have insurance. If they're healthy and they don't go to the doctor, maybe they can stick with it for 10 years and that's fine. But if there's any life altering events, it should definitely be reviewed and see if it's still the right plan going forward.
And I appreciate you saying that, Kimball. I mean, it's as advisors, right? We want to make sure that we're making adjustments on a regular basis. Our financial lives are, we like to, the analogy is kind of a plane ride from the East Coast to the West Coast or vice versa. And along the way, you want to check in. You want to make sure that you're going in the direction you want to go.
Yes.
And so do you work with other professionals, business attorneys, financial advisors? Do you work with those other professionals to help individuals kind of put that plan together to make sure that it fits into their overall financial health?
Yep. Yeah. One of the common ones is financial planners,
Perfect.
especially someone getting ready to retire. Um, Sometimes they'll have financial planners call me up and say, looking to retire in 6 months, what does this look like? Or I need to know what health insurance is going to cost me so I can decide if I can retire in 6 months or if I have to work for the next 5 years or whatever the case may be. So yeah, I work with advisors, other professionals all the time, just to try and run some numbers, run some quotes, tell them what it would look like based on their income or based on their adjusted income after retirement. And for a lot of people, if they actually are retiring and their income is potentially going to drop at that point, um, insurance becomes a lot more affordable
Hmm.
because of that loss of income. So there's a lot of factors that play into it, but I run scenarios all the time to help people plan.
Perfect. And then as an overall market, I mean, are you seeing some trends that are coming, in the future? And I know there's an election, there's all kinds of things happening in that kind of aspect of things. And obviously things get choppy. But as a whole, are you seeing things that are coming down the pipe that people should be aware of?
Um, yes and no. A lot of the changes that are coming, we don't know, and we won't know till
After,
they happen. It's based on a lot of different politics. The one thing that um, is interesting right now is health shares.
okay.
Um, in the past, there was a lot of people that were leaving the marketplace to go to health share because it was more affordable.
Hmm.
Currently, after with the Biden administration, subsidies are pretty high, and because of that, there's a lot of people that are actually leaving health shares to go back to the marketplace
Okay.
because now the marketplace is more affordable. So there's sometimes a shift in based on economics or the economy or whoever the president is, some extra subsidy money on which plan is most affordable. And that's a big shift that we've seen recently. Is the marketplace was really really expensive for a lot of people for right now it's pretty affordable for a lot of people, and depending on your if you're self-employed, for instance, the real estate industry, I got lots of clients that were making, two, 300, maybe more
A lot of money.
annually in the real estate industry a couple of years ago. And then with interest rates and shift, now a lot of those same people are making a lot less. So what they may have been much better off on a private plan a couple of years ago. Right now, they're much better off on a marketplace plan. And then if the
Yeah.
real estate industry heats up again, those same people might want to go back to a private plan to save money.
And this goes back to your point, and I think it's another important point to make here. is that it's crucial for individuals to evaluate what they're currently using on an annual basis. And,
Mhm.
health insurance, life, it doesn't matter the financial tool. It's critically important to do benchmarks on all of these plans to make sure that you're getting the most out of them.
Yep. Yep.
Yeah. So, Kimball, look, I really appreciate your time. Any final thoughts, any advice you could give someone who may be looking at some of this information that we've provided today? What's kind of your final thoughts on that? And how can you help them?
You know what? Um, as as far as connecting with me, um, the biggest insult that someone could ever give to me is that I'm a salesman. I'm not a
Mm.
salesman. I am a consultant. I'm going to help them find the best plan, and I don't think anybody feels like I'm pushing them into anything. I'm just help. I usually don't sell anybody. I help people save money. Um, and most of the time when I talk to someone, I'm going to find a solution that's probably better. Occasionally, I may say, "Hey, the plan you're on looks fantastic. I wouldn't change anything," and I'll tell them that as well. Um, but the time invested to learn about what your options are is could be huge.
Yeah.
I mean, I've saved people 3, 4, 500. I pay save people $1,200, $1,500 a month on
Wow.
their insurance. So it could be a really big windfall of money to just change up plans from what you currently have to what options are available that you didn't know. Um, and on vice versa, you've got people that um, money isn't really the issue. It's like I need a doctor and I need a network and I need a plan that covers these needs, and we can do that too. But either way, if you're trying to get service or if you're trying to save money, um, a 45-minute consultation could be extremely extremely valuable in the long run.
Perfect. Kimball, and for everybody watching and will watch this in the future, it does not cost anything for
No,
that
no,
consultation.
right.
And whether it's Kimball or somebody else in that network, please reach out. Kimball's information is below. The website is below. All of his contact information is on that website. So if you have any questions, please reach out to him, reach out to us, leave it in the comments. Make sure to hit that like and subscribe button. We do this every week. We have professionals to help you make sense of what's going on in the financial world because there's a lot going on right now. So please reach out to us if you need any help. Kimball, thank you, and really appreciate your time and look forward to having you back.
Yep. Thank you, Mike.
Okay,
Appreciate it.
bye.
Indeed.